Alright, hello guys, welcome to lesson 5 of the box system. Today we will discuss the importance of the overall market environment in making our trading decisions. So, what do I mean by the overall market environment? The overall market environment is determined by the main indexes, right? You have S&P 500, which is the collection of the 500 biggest stocks in the USA. And you have the QQQ, which is the Nasdaq, right? The Nasdaq and the S&P 500 are what determine the market direction. That's what you can use to understand what the macro environment, what the overall environment of the market right now is. That will help you make decisions on individual stocks because think of the overall market as a river. If you think of it as a river, it's a lot easier to swim with the flow than against it. So if your individual stock is trying to go in the same direction as the overall market, it will be a lot easier for it than compared to trying to go against the market. Imagine if S&P 500 is dropping, it would be a lot harder for your stock to go higher compared to when S&P 500 would be strong and going higher as well. So that's why it's important to understand the overall market environment when you're trading, because that is essential to your decision making process. Now, if you have seen the free zone to zone trading video, you will have an idea of most of what I'm talking about. If you haven't seen it yet, go check it out. It's available for free on HU 2.0. And if you're not in HU 2.0, well, I will send you a link, send me an email, send me a DM. But if you're not in, I don't know why you're not in there. It's great. Come join. All right, so let's start discussing this from a bigger time frame, from the weekly time frame. You already know what zones are. We discussed that in the first video. The zones are important price levels above which the path of least resistance is higher, below which the path of least resistance is lower. So let's mark a weekly zone that's of immediate consequences. It's around 423. You see, acted as a resistance for a bunch of weeks. As long as the price was below it, path of least resistance was lower. Once price crossed above it, it acted as a support on a retest and the price went higher. So if the price comes back here, it is likely to provide some sort of support for the price. And if the price stays above it, well, the path of least resistance will continue to stay higher, which means don't start taking any big short positions, any long-term short positions. The reason I've marked this zone will come into play later in this video. You will understand. So when I'm trading week to week on a daily chart, the most important thing to consider is a daily zone where SPY is, right? The current important zone right now is around the 451.5 level. Price has stayed above this zone for about 6 days. It has bounced off of it a few times. Once this zone breaks, the path of least resistance will be lower to the next zone, which will be around 446. Maybe, yeah, let's say around 446. So what I have seen in my trading is as long as SPY is above its highest zone, the likelihood of a breakout working out for us is higher. When SPY is below it, that likelihood drops. How much does it drop? When SPY is above its latest zone, 8 out of 10 breakouts will work. When SPY is below it, maybe 5 will work. That is a strong hit to the expectancy of our system. So you have to pay attention to this thing. If you cannot define zones easily, or if you're not interested in that, a quick hack is the 9MA, right? If the price SPY falls below 9MA, I stop taking any new breakouts. That's it. Any of the trades that I already have, if they're acting right, I will keep them. If they're not acting right, I will start cutting them. It just means I'm going in the defensive mode. I'm not saying I'm going short. I'm not saying I'm bearish on the market. I'm just saying the market is supposed to have some chop because the short-term momentum is dying down, and I'm going on the defensive mode. That's it. So once price falls below 9MA, I get less aggressive. Usually corresponds with the first zone as well, so you can use the 9MA as a proxy for it. What after that, right? After that, more often than not, the 50MA comes to the rescue. The 50MA comes to the rescue. As you have seen since October, the rally, 50MA has saved it about 8 times. So the positions that were working fine, even though SPY fell below the 9MA, that I am still holding, if SPY stays above 50MA, I will keep those positions. Right? I will, unless they break the trend structure. As long as they're acting right, I will keep them. Once they stop acting right, once SPY falls below 50MA, I will move to all cash. Now it's time to sit back and relax and understand what the market is about to do. What is the next step? The next step is to look at the weekly zone, and only when we go below the latest weekly zone will I start shorting. Will I start having medium to long-term like swing shorts. I won't start shorting till the price is figuring itself out above this zone. Only below this zone is when I will get bearish. That's the importance of the first weekly zone. So those are the things I look at. You will understand the market environment is very important in our day-to-day trading decisions, because you want to make trading easy, almost second nature to you. In which case, you want to make decisions that come naturally. Take trades in the direction of the market. Don't try to fight the market. It is usually stronger than you. Over the long run, it will hurt you. All right, that's all there is to this video. I will see you in the next lesson.